Ethereum lost $500 billion. Just kidding. Lost $500 million though. That's a typo. New all-time highs in short liquidations, at least when measured in dollars, point to overly bearish sentiment. This is something to really pay attention to, because this shows you the sentiment of the market. Let's dive into this article here. Over here on Cointelegraph, let's look. So dollar-denominated short liquidations hit a new all-time high on October 25th. If you remember, that was the big day of the pump that Ethereum and Bitcoin had this week. Now, to continue with this, Ethereum USD delivered fairly impressive gains on the 25th and the 26th. Ethereum went from 1337 to 1593. If you're not monitoring this stuff, that's a big deal, because when you see short liquidations to this kind of capacity, this is a record-setting capacity, that shows you how bearish the market is. And you know what else it means? It means that with all that bearishness, right? With all that bearishness, we still didn't get new lows on Bitcoin or Ethereum. It's record-setting bearishness. That's why these shorts happened, these liquidations happened on these shorts, and we're still not hitting all-time lows. So I would call pretty strong support levels. This little move right here is what caused all that carnage on the bears, on the shorters. Now, let's continue with this. Be sure to subscribe if you haven't. Coming at you with good content all the time. As with Bitcoin, the market had become heavily short Ethereum, expecting a trip to new macro lows after weeks of sideways action and failed breakouts. This continues on what I was saying. The market is overly bearish, extremely bearish, and it still couldn't get new lows. Holy crap, are we at a super strong support level? Am I saying we're at the bottom? I'm not saying that. Am I saying we're at the bottom? I'm saying it's possible. It's possible. Now check this out. Only took around $250, right? That's all this move was, about $250 on ETH, right? Going from 1337 to 1593. Only took $250 of upside to liquidate more short positions than ever before. 275 mil on October 25th and another 250 mil the day after. Wow. So over $500 million worth of positions were wiped out in 2 days. Daily short liquidations across all exchanges reached an all-time high. Are you getting this? The bear pressure, the push down, the anticipation for lower prices is at like all-time highs, okay? And it still couldn't push down. That means something. I don't care which side of the aisle you're on. If you're saying, we've bottomed, or we're going lower, or if you're like me and you're like, I kind of see both, I'm not sure. This is showing that, listen, there's a lot of support here at this level. And I'm going to get into something else too in the next article we're going to look at that's going to show something else too. It's actually this article right here, where Amazon and Meta and Google and Microsoft dropped quite a bit this week, especially Amazon and Meta. And still, what'd crypto do? Said, oh, had no idea. Didn't move. October 25th and 26th saw 328 mil and 332 mil of short liquidations on Bitcoin. Let's go to that other article. Here's the next article we're going to go over, and you're going to want to see this because this is going to get into more of what's going on, because what you want to know right now, right, is what's going on and what's going to happen. So you really need to understand what's going on right now, and there's so many things going on right now, it's hard to get a gauge. That's why there's so much argument and discrepancy between what people think is going on. So we got to look at the data. Check this out. Bitcoin's weak hands mostly gone as Bitcoin ignores Amazon and Meta stock dip. That's a huge deal, right? Because how long have people been saying, and we've been seeing correlation between crypto and the NASDAQ, the tech stocks. Huge tech stock losses, mostly occurring after the Wall Street close, failed to show up in Bitcoin price weakness. Well, how big were the losses? Maybe they were little, maybe that's why. If they were big and crypto didn't go down with it from someone like Amazon and Meta, then that would be pretty interesting, wouldn't you say? Now, Bitcoin is decoupling from big tech as disappointing earnings fail to spark any major Bitcoin losses. Interesting. Economic data for Q3 2022 saw heavy losses for some tech stocks, but Bitcoin avoided a chain reaction. That's worth noting. Bitcoin hodlers shrug off Q3 tech results. The largest cryptocurrency shed around $800 over October 27th, or 3.8% after hitting highest levels in 6 weeks, which was nothing compared to what happened to Amazon and Meta. Amazon and Meta, well, we'll get into that in a second, but they dropped down 20+% at points in a day after hours. Wow. The same was not true of the tech stocks, like I said. They were led by a dramatic 20% rout in Amazon during out of hours, after hours. Amazon's market cap sealed the biggest such post-close drop in history at over $230 billion. You know how many companies in the history of companies have even been worth $230 billion in total? Yeah. Losing $230 billion in a day, basically an hour, after hours, basically an hour. Whoo-wee, not normal times. Amazon's come down notably failed to spark copycat moves on crypto markets. The same is true with similarly painful results from Meta. Similarly, even more painful. The stock price of which fell below $100, returning, check this out, to 2015 levels this week. That means Meta, Facebook, Meta, has lost 7 years of gains, including the last 2, of course, which were absolutely parabolic. Meta, wow. Meta has lost that. Facebook may have kept that. Let's continue. Last January, this is very important, check this out. Last January, Netflix's earnings and its ensuing 20% crash sent Bitcoin down 20%, Ethereum down 30%. Today, Amazon's earnings and its ensuing 20% crash sent Bitcoin down 2%, sent Ethereum down 3%, and that was after an over 10% rally that Ethereum and Bitcoin had. So really, Ethereum and Bitcoin were up roughly 7-8% after that. So for the week, Bitcoin and Ethereum were very up. Crazy, right? So here's a good quote. Weak hands are mostly gone. That could be very true. But it's hard to say the correlation has completely gone away or is completely not there, right? Past week has not seen the clear-cut lockstep moves between Bitcoin and equities stocks. Bitcoin's growing correlation to gold is now gaining attention once again. A long-term trend change in correlation with the S&P 500, for example, is still far from being confirmed. Mario Nawfal, founder of blockchain consultancy firm IBC Group, summarized, while it's too early to say if this trend continues, it's worth watching. And here's a chart of Bitcoin versus the S&P 500. So what's my takeaway on all this? I think there's probably still a correlation going on here, but just crypto has gone down so much on a percentage basis from its top to where it's at that the stock market is actually behind, and I think that they will start to move closer together once the stock market comes down lower, if it comes down lower, which I am definitely leaning that it will. Could we be at a total bottom? We could be. We could be a bottom across all the markets. It's possible. Because no one really knows where the bottom is. It's very important to realize that, because as things start coming up, we don't realize we were at a bottom until after we were at a bottom, and usually not right after. Moving into the end of the year, we can very well see a good pump here. Very common in November and December. Very common in November and December during a recession, during a bear market. I think that we need to wait for at least the first quarter of next year to really know what's going on, maybe the first half. Because we need to see some more interest rate hikes. We need to see some more GDP ratings. We need to see some more earnings reports. And most of all, we need to see... It's more cowbell! We need to see definitely more cowbell, but we definitely need to see more stability. We need to see more up prices. We need to see inflation come down. We need to see earnings go back up. We need to see signs that we have hit a bottom. We need to see that Fed pivot. And I don't just mean slow rate hikes. I mean, they need to start reversing course and changing their language. Then we could find what is probably a meaningful bottom. Just my opinion, not financial advice. hit the subscribe button. You are awesome.